Hello, everybody. Thanks for tuning in. Today, we're going to talk about interest rates because they're such a key factor in buying, selling a home, the housing market. And we're going to go over some touching points on, because I tell everybody, like, hey, if you look at this historical interest rates over the decades, we're still in a good spot pretty much. And people are always telling me this is the most common thing I hear. I'm waiting to buy because interest rates are high. I'm going to wait till they come down. Do you hear that a lot too?
Oh, yeah, all the time. All the time.
That's pretty much the number one thing I hear. And then I have to try to educate them and, be like, hey, look at these numbers, these statistics, these facts of interest rates over. I have it starting from the 1970s here. So we're going to go over that. And Brandon here, go ahead, tell us a little bit about yourself, Brandon, what you do. He's one of my preferred lenders, so I'll let you proceed.
Yeah. My name's Brandon Ellefson. I'm with Fairway Independent Mortgage. We're located here in Henderson, Nevada, and I've been in mortgages since 2018. So I've kind of seen some changes in the market from that, not only prices but interest rates too. I mean, kind of got into the game when we did see interest rates. They were at a low time from early 2010s up till 2018, 2019. We did start to see interest rates increase, not to the degree we see them now, but have seen fluctuations in the market. We're dealing with a little more extreme version of that now, but and with higher priced homes, but
So
we're working through it.
I was explaining this to Brandon, and he was like, well, let's compare this to the median salary and the interest rates, because it sounds good when the interest rates are high, but the median salary was equivalent to the median home price was a lot more graspable back then, even with the high interest rates, right? So we're just gonna go look at this. So this is my spiel when people tell me, hey, the interest rates are high. So I have to explain to them, well, let's look at this chart, because we're actually sitting in a good place. So if you want to go back to 1972, interest rates were at 7.38%. Now, let's say that same person is like, hey, I'm going to wait till he was in 1972. I'm going to wait till interest rates come down. He would have had to wait till, let me see here. We're way over here. I think it's 1993 for interest rates to come down. So that's 20 years he would have to wait till he purchased the house. And in that 20 years, let's look at the median home value within that 20 years. Let's look at what he would have missed out on if for him waiting, or what he would have accomplished without him waiting. So this is the federal, what is this?
Federal Reserve economic data.
Yeah, so this is Federal Reserve economic data. Thank you, Brandon. Yeah. And this pretty much tells us the median home price over the years. So if you want to look at 1972, where they said, oh, I'm going to wait, we'll look at fourth quarter 1972. I'm going to wait till interest rates drop. So the median home price in 1972 was $29,200. Now, interest rate dropped in 1993. Let's look at that median home price. The median home price is $127,000. That's a 335% increase on the money he could have made by purchasing a home right then, when he could have afforded it. Because people always ask me, was it the best time to purchase? When your financial situation is right? 100% all the time. So I brought this up to Brandon, and he was like, well, let's wait. Let's look at some other statistics, because even though interest rates are still in a good place, let's look at the median salary and the home price and the drastic change between them. So he brought this up, and he emailed me all this stuff, and we'll bring it up right here. So Brandon, if you want to go over this, because this was very interesting for me as a professional in this field to be like, all right.
Okay. Yeah, exactly. Yeah, context is key when we're looking at interest rates and home prices. We have to look at the total picture of what's going on, because I hear that all the time too. Of well, yeah, rates are 7% today, but back in the 1980s when I was buying a home or I was first getting started in real estate.
Yeah, back when I was your
yeah,
age.
that's your age. We had 14, 18% interest
Yeah.
rates, and like that. Obviously I can't argue with that. We did have a lot higher interest rates back in that time, but again, looking at the context of it's really important,
Yeah.
so we can compare apples to apples instead of apples to oranges,
100%.
which I think some people are doing. So yeah, if we look back, 40 years ago to 1984, we look at median household income, how much people were earning. Again, all this data is from the Federal Reserve economic data. Back then it was 56,000 a year, and then we look at fast forward to today, 71,000 a year. So we've seen about a 29% increase in the last 40 years.
It's pretty disappointing.
Yeah, I think most people over 40 years would probably want to be earning, have a more than a 29% raise. You put all your time in. Wherever you're working, you're probably going to want to be have a bigger jump in income than that. But looking at across the United States, looking at median household income, that's all we're seeing.
Yeah, and you say that was in 1984.
Correct.
And the interest rates were what in 1984?
We believe we were right around 14% at that time.
Okay.
So again, we're dealing with higher interest rates back then. People, we're dealing with that, but relative to what their, income was, it actually wasn't as big of an issue as what we're seeing today.
Yeah.
And part of the reason is because of how much
Housing
home prices
has
have
increased.
Exactly. Back in '84, median home was $81,000. I think people would kill to have an opportunity to buy something like that today, because today we're looking at right around 420,000.
Yeah. Nationally,
correct. Yeah. We're looking just across the states, and so we're looking 81,000 to 420,000. It's a 420% increase.
To 420. Say that again.
420% increase.
420% increase in the median home price compared to the median salary at 27% increase.
Right.
It's just not adding up. The numbers are not mathing. The math's not mathing.
And it's certainly not. And so again, we'll dive deeper into this though. We look at we've 420% increase in home price, but again, hey, we were dealing with higher rates, double the rate we're dealing with now.
Yeah.
If we're looking at a 7% rate today versus 14% back then, how does that add up? Well, if you look at buying a median home back in 1984 at a 14% interest rate, you're looking at, without taxes and insurance, your mortgage payment's around $770 a month. And today you do the same thing. You buy a median priced home with 20% down, looking at about $2,250 a month, which is about a 190% increase. So again, let's look at the whole context.
Apples to apples, right?
Yeah, 29% increase in median salary or median household income over that time. Meanwhile, we're seeing your average mortgage payment let's be fair, we're not even doing tax and insurance, which has also gone up quite substantially over that time as well. We're looking at a 29% increase in income, but a 190% increase in your mortgage payment.
Yeah, so that's where the disparity lies. Even though interest rates are looking good, you gotta look at factors like, well, what are you making right now compared to what do you have to put down? Compared to back then. So even back then with the 14% APR, it's better than what it is right now at 7%. If you do apples to apples. So what does that mean to the consumer? What does this all mean?
Well, people still, will ask me, is now a good time to buy? And like you were saying earlier, it depends on your financial situation. Yeah. To me, the most important numbers when you're looking at purchasing a home comes down to your monthly payment and your cash out of pocket. So we gotta make sure you're comfortable with both. You might have the money to put 20% down on your dream home that you want, but if that puts you in a mortgage payment that is stretching you beyond your means, then
doesn't make sense.
It doesn't make sense. You want both of those numbers to be comfortable for you. So, it's really just aligning your kind of almost realigning your expectations with the current market we're in, and those are the types of conversations I'm having most frequently now, of just kind of readjusting your expectations of what you want versus what you can afford.
100%.
And so again, a lot of people, we kind of live in a microwave mentality these days, where people want things now. They want
now.
Yeah, now. They don't want to wait. But it's kind of having that conversation of maybe not necessarily waiting to purchase a home, but waiting to purchase your dream home, and looking at real estate of kind of laying out stepping stones to your dream home.
Stepping stones. I have to lay this out, and nobody, like you said, everybody wants it now. I'm like, well, you're never gonna get there if you don't take that first step, because you can't skip these steps. Exactly. Especially when the median salary is only going up 27% in 40 years, and the median home price gone up 400 and something percent. So if you don't start at that stepping stone, you're probably not going to get there. And fortunately, I've seen many pass up opportunities when they had it, like when the interest rates are at 3 or 4%, and now they're definitely never going to get there.
Yeah, because I've worked with clients even in this market where we've seen interest rates go up. I've worked with clients who purchased a home with me back when I was first getting started back in 2018, 2019, when you could buy a decent starter home for around $250,000, and they built up all this equity in the home through not just the home price going up. Obviously, we've seen home prices explode, but at the same time, they're paying down their mortgage, so they're gaining more equity that way. So, there's two ways that you're building equity. You're building wealth, and then they've used that, even over time their salaries have gone up, so they're more comfortable with the mortgage payment going up, and have used all this equity they built up, where back then they were only putting about $10,000-$15,000 down on the home. Now they have $150,000 they can put into what they now want.
Dream home. Yeah,
exactly.
Compound interest is a real thing.
Yeah.
Which people don't understand. So
exactly. So that's my recommendation of, it's just kind of resetting your expectations again. Maybe you're not able to get your dream home now, but let's find something where we can get you into a home where you're comfortable with
forced savings and all that kind of stuff.
Yeah, you're in a forced savings plan with your mortgage. You're going to build equity, and then we can kind of game plan for, hey, let's look at 5+ years out and see where you'll be, and try to get you in that dream. It's going to be attainable much faster if you just get into the market rather than trying to time the market of interest rates coming down.
Like, what does Warren Buffett say? It's not timing the market, it's time in the market.
Exactly.
But who's Warren Buffett? I don't, whatever. But yeah, that's the moral to the story, is don't be that person that waits for interest rates to go up or go down, and it takes 20 years while the the appreciation in their home went up 335%.
I saw a study too, National Association of Realtors did, of comparing net worth, the average renter versus average homeowner.
Oh yeah, it's drastic.
The average homeowner had a net worth 40 times that of the average renter. So I mean, that's proofs in the pudding there. You gotta start somewhere.
Yeah, 100%. And you might be uncomfortable downgrading for a little bit, or even if you're uncomfortable doing that, maybe just rent it out. Just get your foot in the door, because that door is getting smaller and smaller and smaller. As you can see in these statistics, 27% increase in median salary versus 422% increase in the median home sale price. So that's, that door is getting smaller and smaller.
Yeah, it seems like it's just, it's narrowing over time.
Yeah, so
there's no stopping.
Now you get a toe in. Just get that toe in. But that's more of the story. I mean, if you guys are in a good financial situation, take don't let the opportunity slip away. So
absolutely.
And thank you, Brandon, for doing this.
Yeah, thanks for having me, Shane.
Yeah, of course. And if if you were interested on getting started in home ownership, give me a call, give Brandon a call, and we'll put you on the path in the right direction. That's it. Thanks, guys.
Bye.